channel. It's been a while, friends. I think like 2 or 3 months since our last video that we did on Elrond, but today we're going to catch up on Bitcoin. We're going to look at the charts, and we're really going to be focusing on the weekly chart and talking about long-term what we think is going to be happening in the market. So we're going to go over a couple of things that are happening politically and in the markets and with banks and stuff that are impacting crypto. And we're also going to talk about Ethereum, EGLD, and Cardano. So we're going to look at all the charts because there's some patterns playing out on all of them with the moving averages that are pretty important to note where additional risk and lower risk lies. So let's go ahead and get started. As always, since it's been some time, we're going to look at crypto quant real quick and just take a look at the reserves and see what's going on exchanges. And then after that, we'll jump to those weekly charts because those are really the most important right now. We don't need to be looking at hourly, 4 hours. I mean, the market's barely done anything in the last 6 months or so. So let's look at it at a further time frame and see what we're looking at in the long term. And, maybe we'll see if there's a relevant need for us to do more videos. We'll start doing more frequent TA. Otherwise, we'll try to keep it at a point where it makes sense for the market or when I really think something interesting is going to happen. Okay, let's get started. So basically, I've shown you guys this before. If you've seen this, this is basically all it is, right? In red, you're looking at the amount of Bitcoin on exchanges. In blue, you're looking at the Bitcoin price. And then in orange, you're looking at the miner reserve. The accumulation distribution at the bottom, the AD, this is telling us whether we're in an accumulation phase or distribution phase. You normally want to look at this at a higher time frame, so this isn't going to give you too much information because we really want to zoom in to see the accumulation and distribution. So when we take a look at the exchange reserves, what we've really seen here since the time that this drop happened. So let's go back a little bit and take a look at where the drop occurred, right? We were sitting at around 21,800, like that's around the end or the early beginning of November. The price of Bitcoin drops down to around 15K. Correlated with that, we see the exchange reserves take a massive drop. Now, all of this is all around the time that FTX is still big news, right? So we're still dealing with that. There's a lot of market factors, even the Fed just continually raising interest rates, people not wanting to invest, people not having money, homes being way more expensive. People are just putting capital aside, right? A lot of the cash that would be going into markets right now is just sitting on the sidelines. So what ends up happening is you see that the Bitcoin exchange reserves kind of level out. And at this time, you're not really seeing a lot of BTC going on to exchanges, but we are starting to see the price recover. Now, what's interesting about that, when the price jumps up and the exchange reserves are still relatively low, that tells us that any movement in price could really have a big impact on the exchange reserves. You could see those exchange reserves continue to drop because as people buy, they'll probably be moving it off exchanges. So this is still interesting. And overall, the fact that the exchange reserves have continually reduced throughout this entire bear market is very interesting because if you look back on prior bear markets, the exchange reserves normally rise during the bear markets. That's when people are trying to sell out. This time, you're not seeing so much of that. You're just seeing less people buying, but the people that are holding Bitcoin are mainly holding it. And that's showing us that there's still a lot of strength in the market and in the participants that see Bitcoin as a long-term investment and aren't really getting fazed by this drop. So that's a very interesting thing. We're also seeing, and I'm not going to pick that up here, but on Glassnode, you can actually see that the amount of people holding one Bitcoin is steadily going up. Right? So the people that are buying 0.1 or up to 1 Bitcoin is continuously increasing. You have more and more wallet addresses that are accumulating Bitcoin at these prices. So that's still very good. Now we come down and we look at the miner reserve in orange. And what you will see is that there has been some miner capitulation. And what's interesting is that some of the miner reserves dropping we're actually seeing correlated when the price had jumped up. So when the price went up to like 24,000, you saw some miners sell off, and they need to. The miners have to use some of their Bitcoin for operating costs. So that's expected. You're not going to continuously see miner reserves increasing until such time that Bitcoin is so stable that they can just take collateralized loans. Right now, there are mining companies that do have to sell some of their Bitcoin to continue operating costs, to continue to pay operating costs. Now, when they have to do that, you're going to see this type of correlation. Bitcoin takes a jump, and then you'll see some drops that correlate with miner reserves exiting and, basically telling us that miners are capitulating to some degree, that are selling to cover those operating costs. Okay, so a lot of what this tells me is that we're not really seeing anything major going on in the Bitcoin market. We're pretty much tied down like the rest of all markets, real estate, equities, everything else, right? Everything is right now in basically a state of limbo. Nobody wants to invest when capital is so expensive and you don't know what the Fed's going to do. If the Fed is going to continue raising rates, you're going to keep seeing markets fall, and that's going to come and hit Bitcoin as well. Now, Bitcoin's unique in the sense that, it can be asymmetric to what the Fed is doing. So the Fed may raise rates again by 50 basis points or something, and you might see Bitcoin drop a bit. But then as soon as the Fed changes their cycle and goes back into QE with quantitative easing, where they start lowering rates, Bitcoin would have an asymmetric move up, because now you're going to see that flood of capital that's been waiting on the sidelines coming in. So I still think that's going to happen. I just don't think it's going to happen until late this year, maybe sometime in 2024. And the reason I say that is because I don't really see the Fed giving any indication that they are going to start quantitative easing anytime soon. Now, if that's the case, they're probably going to be doing it closer to the next presidential election, because that's when, once you start doing quantitative easing and lowering rates and all that stuff, you start have interest rates going down, people have more money, 401ks will go up in value, and that's a very good campaigning point for the administration currently in power. So think about that as a time frame for when you may expect to see these things. When do you think it's going to be beneficial politically for them to start changing the economy and going into quantitative easing? They keep it as tight as possible to get the best benefit in terms of reducing inflation, which technically you're not really reducing inflation, you're still manipulating everything, but they're trying to make costs go down, and costs are going to go down if people aren't spending money. So that's basically what they're doing. They're trying to put the noose on everyone so it's too expensive to borrow capital and you're going to have way less spending. Okay, so here we're taking a quick look at the leverage ratio. Bitcoin's leverage ratio is basically telling us how much, on average, users are using leverage for higher risk trading in Bitcoin markets. Okay, now pretty much these derivative trades can control a lot of market price and swing fluctuations, because liquidations can be very impactful on the Bitcoin price. And what we're seeing since October is that the leverage ratio has been continually diminishing. Now, that's kind of interesting, because that's telling us that a lot of what's been working on Bitcoin's move up since around 15K has been a decrease in leverage and likely more spot trading. So that means people actually buying Bitcoin and holding is more likely what's causing it than actually leverage moves. And this is good, right? It's showing more stability. It correlates also with what we see as far as users increasing holding 0.1 to 1 Bitcoin, like I mentioned earlier. So this is a good thing, right? The more leverage we flush out of the market, that's really much better for the market. And what you'll probably end up seeing is, when we do come to such a time that Bitcoin starts shooting up, you're going to see that leverage ratio start shooting up. You're going to see the Bitcoin price shooting up, because people will be going long. And then as that happens, you go back into that highly volatile stage where you have a lot of ups and downs and a lot of people swing trading with derivatives. So that's an interesting thing, because that shows me the more leverage we're flushing out of the market, the more stable these moves up are becoming. We're kind of setting bottoms now if we're increasing price while there's less leverage in the market. So that's an interesting thing to look at, but this all takes us all over the chart now. So now we're looking at the TradingView chart. And basically on this chart, there's a couple of interesting things. I've pointed out here 2 price levels, all right? 19K and 12K. We're going to come to those in just a minute. But the first thing that we're going to take a look at is the 20 exponential moving average. That's the moving average in blue. Now, what's interesting about this moving average is that it's very important historically, right? If we take a look at the bull market, when we came out of the March 2020 crash, which was right here, right, we moved up above that 20 exponential moving average and we rode it all the way up until we went into 60K, right? Then we dropped back down, we went below it briefly, and then we went up all the way up to like around 69K. And that's when we fell below that 20 exponential and we were not able to break it again. So there's 2 things that the 20 exponential moving average shows you. One, when you're moving above the 20 exponential moving average, you're in a bull market, right? You have good price appreciation, you're very strong. Once you fall below that 20 exponential moving average, it's almost a sign of the reversal, right? You start seeing that now we are reversing trend and we are moving downwards. And then we stayed below the 20 exponential moving average throughout this entire bear market. Okay, now what we are seeing for the first time in over a year, starting in January, we broke above the 20 exponential moving average. We got resistance at the 50 and 200 exponential moving averages. And now we are actually hovering in between those and the 20 exponential. Price is getting constricted in this area. So this area from around 21,000 to 25,000 is super key because we're basically setting in a massive support level here for the future. Right now, our key resistance is at 25K. Everyone knows that. But what's really critical is this 21K line because 21K is where the 20 exponential moving average sits right now. And what we really want to see is that Bitcoin does not fall too far below that. If we go below the 20 exponential, we want to be below it very briefly, like no lower than 19K, which was our previous support here. And then we want to go back above it very quickly and continue that move up. That's going to show us that we are moving into a stronger time for Bitcoin, right? Now, granted, chart-wise, this is what you want to see to tell you that you're going into a bull cycle. But what's interesting is that the Fed is controlling so much liquidity right now. They are basically forcing people to put liquidity on the sidelines and stop investing. Now, when they're doing that, there's a lot of fear in the United States and kind of globally about recessions. And the reason for that is because if you force people to stop spending money and they're not earning as much and the value of their money is not getting them as much, well, you go into a recession. You start to lose a lot of jobs. And companies have a lot of their money put aside in investments. So when companies' investments are not doing good, they can't afford to pay as many salaries. So you end up having a lot of layoffs. Now, causing a recession is going to cause less people to invest. It's going to take more liquidity out of the market. So that's a risk right now that we can't really predict based on the Bitcoin charts. But what I will say is that if we continue to see Bitcoin hover above or within this 20 exponential moving average without falling significantly below it, we're in a good place, right? What we don't want to see is us going anywhere down towards this 12K level. 12K was a major support level and resistance level when we were first breaking out. So it is very possible that we go that far down and test it. But if we were to do that, that would be a terrible sign because that would tell us that we've lost this 20 exponential moving average and this is not a breakout, right? I personally don't think that's going to happen because I think within a year, the Fed is going to have to start reducing interest rates or risk going into a very bad recession. And that's going to have global implications. So, and plus with the presidential election coming up, they're not going to want to just have a poor economy when it comes to the next election. So I really think that what we see is some sideways trading here and Bitcoin is going to hover between this 19K mark with a maximum of around 27 to 30K. I think this entire range here is really going to be where we'll see Bitcoin until the Fed changes their monetary policy to quantitative easing. Once they do that and they give the signal for money to come back in the markets, that's when I think you see Bitcoin take a very sharp stance to the upside and start moving back in that Bitcoin fashion of just going ballistic on the way up. So that's really what I'm looking at right now. And these are the key levels, right? I still watch the charts like daily and hourly and all that stuff. I still look at them, but they're not very relevant right now because there's so much going on geopolitically. You have to look at those things. You have to see what's going on in Russia, what's going on in Ukraine. How is this going to impact markets? What's the Fed's stance on monetary policy? What are they doing with interest rates and quantitative easing? These are really the things that are controlling all markets right now. And when you have a global bear market, that's how it works, right? But once that bear market changes and they start loosening policy again, interest rate starts coming down, people are borrowing money again, people are investing again. That's when I think Bitcoin outperforms everything else because of its supplied economics, right? You saw the exchange reserves already. Those are continually going down. The Bitcoin supply is going to start halving again next year. Next year, the outbound supply from miners is going to get cut in 50% again, right? It's going to get cut in half. So you have those things happening and it falling in this 4-year cycle along with where the Fed is most likely going to be doing their quantitative easing. I think Bitcoin's in for one hell of a run in its next bull market. That's just my suspicion. But, we don't know for sure because we really don't know how things are going to play out geopolitically. So we got to see where that goes. Now we're going to take a look at Ethereum. And what you see with Ethereum is something very similar, right? Ethereum fell below that 20 exponential moving average and is also getting constricted, right? It's getting constricted between the 20, the 200, and the 50. So you have Ethereum performing very much like Bitcoin. It's basically following Bitcoin right now on a percentage basis in its own chart along with the moving averages. Now let's take a look at EGLD. EGLD has a bunch of other levels we've been tracking for a long time. And remember, EGLD, Cardano, these are all much higher risk assets because they are not as heavily adopted as Bitcoin and Ethereum, right? So what you see with eGold here is that it also fell below that 20 exponential moving average. We went into what we call the ultra pain support of $35 to $40. And then we came back up, we hit our resistance level at 54, almost right on the money, and now we are trading in this line. Now, the only thing that I see with eGold and Cardano that is very, very similar is that both of them are below their 20 exponential moving average. So they are actually performing weaker than Bitcoin and Ethereum. And it makes sense because they have less liquidity, they have less users using those platforms yet. There's been an exodus from DeFi because of what happened with FTX and Silvergate and all of this stuff. So that becomes very, very important to note that these are definitely higher risk. I'm still looking at $35 to $40, like this general area, as being where I think we're going to continually get support. But this is based upon and predicated upon the fact that the Fed's going to start loosening policy and markets are going to start recovering and people are going to come back. But I will still say that even though I haven't sold any of my Ethereum, eGold, or Cardano, I understand that they're higher risk, right? So I've reduced the amount that I'm accumulating because I have to, right? I have to play the field the way I see fit, right? I can't predict exactly what the Fed is going to do, but I suspect that once they start pulling that quantitative easing trigger, everything is going to go up. So I'm still accumulating, just not as much as I was before. I'm just accumulating more Bitcoin. And that's also because the SEC has been very critical of DeFi and what's an unregulated security. They're starting to go after exchanges. Now, if they start doing that, that tells me that at some point in the near future, maybe in the next year or two, the SEC is more than likely going to put out legislation or regulation that specifically states what properties of an asset constitute a commodity or an asset or a security, right? And if they create regulation that basically categorizes all DeFi tokens as securities, well, then suddenly everything starts getting delisted until United States exchanges file and become registered national security exchanges, right? They have to national, what is it called? It's like regulated national securities exchanges. That's what they have to do. They have to register to become one of those, kind of like E-Trade or any other broker, right? When they do that, then they can start listing assets again. So if something like that happens and there's no transition plan, then they could just make it so that exchanges have to stop listing DeFi tokens in the United States. And if that happens, there would be a massive drop in all DeFi assets because you would have people trying to sell out of fear. So I'm keeping that in mind and I'm accumulating less of these just in case that happens. There's no way to know if or when that will happen. I hope that it doesn't happen because if they do it that way, it's basically the SEC attacking DeFi. They would do that for only one reason, to sow fear and get people to sell out of DeFi assets. And then once they make them securities and they're regulated, then people can start buying again and it's all under their umbrella. So these things are scary, right? Regulation can be interesting when you have people like Gensler in power and controlling the SEC and basically regulating by force. That's what they're doing. They're not being clear on regulation and then they're forcing people to do certain things. That's like the mafia. You know what I mean? Like they're coming and they're telling you, you have to do this, you have to do that, and then they're not explaining why. And they're not explaining their reasoning or their interpretation of regulation. So I'm very disappointed in the SEC. I actually don't really respect the way it's being run right now. And I don't think that they're doing anything good for innovation in the future. I think Gensler and a lot of the people that are in charge right now need to be out. And we need people in there that understand these technologies, that understand their implications, and that can foster an environment where people want to come to the United States and build, right? And right now, they're not doing that. So I don't know when that's going to change, but right now I take it as a risk and I'm using that to make sure that I'm accumulating appropriately and managing my risk appropriately. Let's look at Cardano. So Cardano, very similar to eGold, right? You see it's been below that 20 exponential moving average. It hit its 20 exponential along the same time that Bitcoin pumped, but now we're below. So it really shows you, right, where the strength lies. Like Cardano and eGold right now are not as strong in the market as Ethereum and Bitcoin are, and it's mainly an adoption issue. If you look at Ethereum and Bitcoin, the charts look nearly identical. Ethereum is basically following Bitcoin to a T. So I still look at Bitcoin as my primary source of information, right? If I see a massive drop for Bitcoin coming down to like 19,000 or even below, well, then I'm going to expect that Ethereum is going to be coming down to the $1,000 level. I'm going to expect that EGLD is going to be coming down to the $33 level. I'm going to assume that Cardano is going to be coming down to the 25-cent level. That's really what I'm seeing here, because that's the correlation that has been continuing throughout this bear market. So you just have to assess what you think is the risk. What do you think is going to happen next? I think that we're probably going to stay stable between 19,000 and 25,000 until such time that we have some news that pushes Bitcoin forward. I also think it's possible that we see Bitcoin make some pumps and then drop back down. So we could see some trading like this, right, for the next few months, right? Something like this, I think, is relatively feasible, and it kind of matches what happened in this area, just at a longer time frame, right? So there's no way to guarantee that that's going to happen, but right now, it's part of the reason I'm still not making videos all the time, because what I'm looking at here is more of a long-term situation, right? There's no reason for me to look at this and expect, oh, there's going to be a huge pump this week, right? Usually during bull markets, I can make videos a lot more often and give you those kind of tips because I'm seeing them in the charts. Right now, I'm not seeing them. I'm seeing us in a phase where we're just having slow distribution and accumulation all at the same time. Everything's uncertain. No one wants, retail's not investing. There's just low liquidity and low volume, and we're not seeing much activity, right? So the key is to try to determine what's going to be the trigger to reverse that. And I think that's going to be the Fed signaling to the world that money is cheap again, right? And once, meaning interest rates are going down. When that starts happening, you start seeing money flood back into the markets, and you have that next start of the bull cycle. That's how it works. Go back historically, since the time the stock market existed, this is how it's always worked, right? You have bull cycles, you have bear cycles, and when the Fed is manipulating monetary policy, they're controlling that cycle. So it's really important now to keep a close eye on what they're doing so we know when that cycle's starting to shift. Make sure that your risk management strategy is sound, right? Make sure you're making decisions that you know are going to be relatively safe for you, right? That's the best way to do it. You just don't want to live with a lot of stress. Personally, I don't live with any stress because of investing, because I'm just investing with risk in mind since the beginning. So I recommend that you do that. Don't make any hasty decisions and keep things calm. You know, if you're a trader and you can earn good money doing that, more power to you. But I don't like the stress of that, right? I like to make my investments, hold them long term, and live my life. It's a lot more peaceful that way. Okay. Anyways, that's basically everything. I think that this is really the most important things to look at on the chart. So I'm going to keep showing you these. I might do some more videos on, or I'm sorry, some TA threads and kind of update you on things. And I don't know how frequent my videos will be, because what am I going to do? Just have another video next week and tell you the same thing if nothing's changed? So we'll have to see. When it's relevant, I'll make more. Okay, one other thing, Silvergate. So Silvergate has really been what has caused the moves in the last couple of weeks. So if we bring this Bitcoin chart down to the 4-hour, you can see that this drop here on March the 2nd, where we went from about 23,400 down to 22,000 in a very, very short time frame. I mean, if we look at the 15-minute candle, you can really see that this happened in a 15-minute period, right? Less than that. You basically saw this drop all the way from here within a couple hours, and then in this one 15-minute candle, we went from 22,500 all the way down to 22,000. Basically a $500 drop in a few seconds when we're not having much activity. You go back a little bit further, and now you really see what happened in two 15-minute candles. All right, this was on also earlier in the day, March the 2nd. You saw the drop from 23,400 all the way down to 22,000, right? A $1,400 drop, actually a little more than that, in about 45 minutes, right? Very, very quick drops, heavy, heavy volume coming in and just pushing the price down. This to me seems like capitulation from one or more large entities. This doesn't look to me like it's retail, right? This looks to me like that Silvergate news came on and someone either needed capital or someone's trying to manipulate the market and did some shorts, and then they triggered this drop. Since then, you've barely been seeing any volume, right? Retail volume has been really low. You're just seeing sideways trading with no real decision in mind, because the market has no idea how to react to all this Silvergate fiasco. If you don't know about Silvergate, in a nutshell, basically what happened with Silvergate, I'm going to switch over to full screen because we're about to wrap the video. So in a nutshell, what happened with Silvergate is that, okay, so Silvergate is basically a bank that did all of the transactions for most crypto exchanges in the United States and some even globally. So Silvergate basically is a bank. They operate on the fractional reserve banking system, so they don't have reserves for everything, right? It's fractional reserve banking. And basically what happened is their clients, some of which were FTX and some of their constituents, created a big bank run, right? People were just trying to draw out money from FTX, and there was more than $8 billion that had basically been requested to withdraw from Silvergate. Silvergate is on a fractional reserve, so they're not holding reserves for all that stuff. And as of the end of 2022, Silvergate held like $4.5 billion in federal home loan advances. So they were taking advances to help them pay out all of the money that people were wanting to pull out of their bank. They were also selling some assets at a loss. Dangerous stuff. Basically, it puts Silvergate in a position where they may not be able to pay back their credit obligations. That's really what's causing this problem. And because of that, they were late filing their 10K with the SEC. It put a lot of scrutiny on them. Coinbase and some other crypto exchanges are no longer wanting to work with them. The market's taking this as a massive risk because it was one of the biggest on and off ramps for US dollars on United States exchanges. Now, in the grand scheme of things, if Silvergate over leveraged themselves like a lot of the people we saw that were brought down by the whole FTX fiasco, well, that's their own fault. The fractional reserve banking system doesn't work, right? It's not a good banking system. It only works when you can just print money. And Silvergate couldn't do that. So they have obligations they have to meet, and now they might be operating a loss because of it, and they might not be able to pay everything back. They're going to have to work things out with the FDIC and the SEC. Until then, they're going to lose a lot of their clients. Now, what's going to happen? Does that mean that crypto exchanges in the United States are just going to stop allowing you to use US dollars? No, that's not what's going to happen. What's going to happen is someone else is going to come in with a better model and make billions of dollars doing what Silvergate couldn't do. Or Silvergate is going to work out its regulatory concerns and come up with a path forward and continue providing services. Whichever way it happens, it doesn't stop anything, right? Because Silvergate going down is an opportunity for another bank. And banks are in the business of making money. They're going to figure out a way to provide support for these industries. It's going to happen. There's too much money involved for there not to be an on and off ramp of dollars. It's going to happen. I have no doubt in my mind this will proceed well, but in the short term, until we have an answer to who's going to be providing those services and stuff, it's definitely looked at as a risk, and it can cause a lot of fear. It could also be used, as news articles come out, as a ploy by certain whales to try to make derivative trades that'll make them a lot of money. Think about it. You take a bunch of Bitcoin, you sell it, and at the same time, you open up a derivative trade that's shorting Bitcoin, right? Well, you might sell 1% of your Bitcoin and have a highly leveraged trade where you're making 2 or 3x just because you have the capital to do it. These kind of things still happen. Bitcoin's still early in its cycles of adoption. The market cap is still relatively low. Until it's big enough to not be manipulated, it's going to be manipulated in this way. And we're going to see certain things like this happen as we have over the years. So keep in mind, I don't think Silvergate long-term is a huge risk to the industry. I think it's just a matter of someone else coming in and providing those services. And it's definitely going to happen. Too much money involved for it not to happen. People love money. Someone's going to come and make it. So anyways, that's everything for me. Video has been fairly long. I hope you enjoyed it. I hope it gave you some insight as to where I sit and what I'm doing. For now, my path forward is still the same. Continue accumulating. Just do it being very cognizant of risk. That's really what I'm doing. I'd say 90 to 95% of my accumulation now is Bitcoin only, because I don't know what the SEC is going to do about DeFi. So until I know that, and until I know how DeFi is going to react to changes in the market, I just have to reduce the amount I'm investing in it. Probably a mistake long term. I can't be sure. But for right now, I'm confident that I will, at the very least, 2x my money in Bitcoin over the next 5 years, whatever I'm buying now, right? Very, very least. It'll probably be much more than that. But I think it's a safe bet that I'll at least do that. I'm accepting that risk, right? And I'm still accumulating DeFi, but just at a lower percentage. It's just what I have to do for now. If anything changes, I'll let you know. Hope you enjoyed the video. Hope I get to see you again soon. Come say what's up on Twitter. Links in the description. I'll talk to you later. Peace out.